Inflation, inflation, inflation. That's going to be the focus again as we head into the end of the quarter. This week, the focus again is going to be on inflation. And the main print to focus on comes at the end of the week from the US. The US has a slightly different preferred measure of core inflation. It's called personal consumption expenditure. And that is published on Friday. And all eyes will be on to see whether there is another decline in the year-on-year measure. And that would mean that the monthly prints have cooled substantially since the start of the year, when there was a surprising uptick in inflation momentum, which slightly startled markets, particularly bond markets. What we're expecting to see is a decline to around about 2.6% for core PCE. Now that's a rather innocuous number, but it's important for two reasons. The first is it will be the lowest core print in over 3 years, and the second is it will actually be lower than the Monetary Policy Committee in the US, the FOMC, expect by the end of the year. And should employment data through January come in a little bit weaker than is expected, then perhaps there is some daylight for the Federal Reserve to lower interest rates. And that would be well away from the election season, and so they could avoid those accusations of being politically biased. Now elsewhere, we'll get inflation data in the Eurozone. We start with inflation data from France, Spain and Italy. Now recall that the European Central Bank has already lowered interest rates this month, so they're unlikely to be influenced by any of these CPI readings from any of the core or peripheral countries. But what it's likely to confirm is that Europe remains very much a two-speed economy. France is likely to show lower inflation coupled with its lower growth impulse, whereas inflation is likely a bit stickier in Spain, for example, together with Italy and Spain enjoying robust growth. So this is unlikely to influence policy there at all. And this is all on the backdrop, of course, of the lower UK inflation we saw last week. And this really does confirm that we're still in this period of cooling price pressures, albeit inflation remains somewhat above target in some areas. And in between all this, we get inflation data for Canada. Canada was the first major economy to lower interest rates in May, and the inflation data for this month is likely to confirm that inflation there remains below target at around about 1.6%, and that may give the Bank of Canada room to further lower interest rates before the end of the summer. And all of this ends with some revisions to GDP data from both the UK and the US for quarter one. Now it's going to be rather inconsequential because this is the third revision of a number which came out in April, and it will simply confirm that the UK exited a very modest recession in Q1, saw a surprising spring in its step for GDP, but it's also going to confirm that the US slowed a little, and that's largely just driven by technical factors to do with the composition of both exports and imports. So markets are going to be more focused on inflation this week as we round out the quarter rather than the revised growth numbers. That's all for today, but please join us tomorrow for our regular morning markets. Thank you.